overall sentiment has actually changed. And I do know that there are quite a few funds out there who are desperately trying to actually move the allocations towards at least closer to neutral where China is concerned. And I think a lot of them have actually been very underweight, not just underweight, but very underweight China. So they're moving back to closer to neutral. And I think that's largely because of the fact that the moves by the PBOC last week was actually quite unusual for them. And, you know, they've cut a series of rates, the MLF, the LPR, the reverse repo rates, and even the reserve requirement ratio all at once. And we've not seen them do that before. So I think the statement of intent is there. And on top of that, they had an ad hoc Politburo meeting a couple of days after that, where the committee actually basically reiterated that they will meet the 5% growth target and that they will not let property prices fall further. So I think that's been pretty decisive where this change of sentiment is concerned. Now, this week is the Golden Week holidays, and if the Golden Week retail sales numbers are much higher than what the market are actually expecting or on a year-on-year basis, then that in turn is likely to actually add to the positive sentiment around China at the moment. So we're looking at that on a short-term basis. But on a medium to longer-term basis, you still need the property sales numbers in China to turn. So the September numbers were particularly bad, and that's off the, you're measuring off a very low base in September last year. And despite that, the September 2024 numbers were actually particularly bad. So we need that to turn around. And I don't think that's going to turn around on a short-term basis because the transmission mechanism via the interest rate cuts will actually take quite a few months. It's not going to be immediate.
Kelvin, we've arguably seen this story before, and post-pandemic, there were expectations that China is going to go parabolic, and it didn't, in fact. Is there a risk that it's going to take longer than the markets expect for all these stimulus measures, which arguably are unprecedented, including putting cash directly into the hands of the consumer, to bite? And then, of course, you've got the election to get through, and if it is Trump, and if it is tariff escalation, then do we have a pullback on our hands?
Yeah. So I think where China is concerned, you need to have a nuanced approach. I think easy money has been made. I mean, if the market is up 20%, right, where Hang Seng is concerned in just a couple of days, then, the low-hanging fruits have been plucked. So going forward, you need to be a little bit more smart about it. I wouldn't buy any of the EVs right now because of the fact that, the EV market is so competitive. It's intense. Anyone who cuts prices by 10%, the rest will have to follow suit. They are in this process of getting market share, regardless of what it does to the bottom line. So I would stay clear of that for the time being. And we've seen how that has actually damaged some of the European automakers as a result of that. I would not touch the exporters as well because of the fact that, if Donald Trump comes back in, the likelihood of tariffs being implemented or being even higher is there, right? So you don't want to actually play into that story itself. What is actually very interesting right now are basically the Chinese consumer stocks because of the fact that, sentiment has changed. And if this week is an indicator, if the sales this week is actually a lot higher than what we are looking for or compared to last year, then obviously the consumer stocks are what you want to get exposure to over the next 3 months.
Are the Chinese internet names, Alibaba, Baidu, Tencent, the best expression of the Chinese consumer?
Absolutely, from two standpoints, because they are the biggest stocks on MSCI China. So if the international funds are hurrying to actually to increase the allocation to China, then obviously those are the ones that they will have to buy, right? The big stocks on the MSCI China index. And on top of that, they are considered consumer stocks as well, because of the fact that a lot of the consumption is done via the online platforms.